welcome to a very special episode of Buy Now, Sell Now on campus. We are at the coveted SP Jain Global Singapore campus, and I'm surrounded by very bright young minds, all of whom are from the Global MBA course. With us today on the show, we have a very special guest, esteemed market veteran Samir Arora of Helios Capital. Thank you, Samir, for joining us today. Well, let's get this started, with I had read about this quote saying that it's never too early to start investing and learning about the markets. We're surrounded by so many young minds today. So what would be your advice when it comes to picking up on investing and how one should start?
Well, first of all, you should get a good job. And you shouldn't be investing with your dad's money. But I started investing when I was in my MBA school. So I would think, actually, I don't think there's any rush to do it on day one. Once you have a job, it can be done with excess money. But many people think that, investing is a way of making money. I don't think investing is a way of making money. Investing is a way of managing your money. That means knowing where to put your excess savings. So it's okay, take your time, plus minus 1 or 2 years won't change anybody's life.
They have a lot of time for sure, and I'm sure they have lots of questions for you, Samir. So let's get started then with our first question, and go ahead.
Hi, Samir. I'm Akarshak. So we keep reading about the volatility in the crude oil prices. So I would like to ask what kind of an impact these prices would have on an emerging nation like India.
They will obviously have a very bad impact in general, but volatility means nothing because that is going to be there in all markets at all the times. So it's more of a bigger picture issue that India in the last few years has in a sense, little bit strengthened itself relative to volatility because they have freed these prices. So no longer are they totally in the balance sheet of the government. Now diesel and petrol are now free price. So that at least it's passed on to the consumers. And that has a strong signaling effect. Because if everything is subsidized, then the consumer doesn't see a change in price. And in theory, he will not react to a price signal. But at a big picture level, it's a negative if it goes up.
So, I mean, just to break it down then, on a scale of 1 to 10 right now, 10 being the worst, how worried should we be about crude oil?
No, you shouldn't be there. I'll give you 10 other things to worry about.
Okay, so not overly concerned when it comes to crude. We've touched upon that. Do we have any other questions? Go ahead.
So, hi, sir. My question is, what have you made of corporate governance issues when it comes to banks? Because we have seen private banks in the spotlight and change of management. So what are your views on it?
So you are talking about private sector bank corporate governance issues.
Yeah, because Samir, that is a bit disconcerting right now. We're seeing some of the marquee
but you're right. So in general, the thing is that India itself and the world also, but there are many corporate governance issues. Now you just found them, if at all you call it like that, in 1 or 2 banks, which is still sort of not decided officially by the system. But in India, because we are very cynical, we mean not me, but generally the Indians at large, so we are able to handle. But of course, it's there. Nowadays, if you see, the system has become a little stricter. For example, auditors you would have seen are now resigning because they are being threatened with imprisonment and punishment and whatever. Like PwC lost that license, which they haven't, they are fighting in court or whatever. But in general, the system is reacting. But this is part and parcel of any financial system, that there will be some governance issues.
So it's not coming as a surprise to you that we...
No, in any one particular name, sometimes it may be a surprise if you thought it was good before.
Were you surprised with ICICI Bank?
Well, it hasn't come out yet officially, anything.
Okay. So let's get in more questions. We've spoken banks, we've spoken crude. What are the other questions that the students have? Hi, go ahead.
Okay. Hi, I'm Joanna. So there are several factors that could drive the market. Global factors, macroeconomic issues such as inflation, interest rate, and earnings. For you, which would be the biggest concern and which would be the main driver for growth?
So in a longer term sense, I think the only driver is earnings. All these things that you say are for effect on earnings. And PE at different times, of course. So for inflation is high, PE will become low and things like that. But at the end of the day, if you took real long term, it will be earnings. But real long term means, let's say 10 years, 7 years, 5 years. In between, you could say that the market is discounting the future or compensating for the past. It doesn't have to. For example, in 2009, The market didn't go up 80% or 60% because the earnings grew 60%. Because previous year the market had fallen 50%. So it was adjusting for that error. So the whole effort of the world is, so we are betting on two things, we means investors. One is if you can bet that the earnings are right or wrong in terms of what the market thinks. And second is whether these valuations will increase or not because it is very cheap, and if they do well for a few years, the valuation will increase because people will reward them for consistency. But that second part is very difficult.
Let's find out over here, just by show of hands, are you guys investing in the stock markets right now?
No, are you reading? First, let's ask, are you reading?
How many of you are reading?
Books, proper books. There are too many.
And what about investing? Are you planning on investing, or are you currently investing in the stock markets? Show of hands. Okay,
Very good.
so a wide majority for sure. Let's get in another question before we go into the break. Go ahead.
Good afternoon, sir. I'm Tushar, pursuing masters here at SP Jain. So in past, we have seen a lot of mid caps and small caps have seen a lot of correction in the Indian markets. Going forward, which are the upcoming sectors in mid cap and the small caps which you are focusing on? Probably we could benefit from the Indian growth story there.
So the thing is, I don't
I'm so
believe...
glad he asked that question and I didn't.
Anyway, I'm not answering it. I wouldn't have answered you also. So the thing is, we don't talk about stocks. So let's do big picture. So the big picture is that it is, I don't believe in small cap, mid cap story as a per se group. Because my feeling is that in many sectors, so first of all, it should be a mix. We call ourselves an all cap fund, where we have about 30% in what we call mid cap, which is stocks outside the top 250 stocks. In India now, they are defining 100 stocks as large cap. So for us, we define 250 stocks as large cap. So in any case, we are a bit more mid cap from that definition. But in general, my feeling is that the company should be big in its own sector. I don't like a mid-cap company in a sector which are 10 large companies. And I don't believe, as I was saying, I don't believe in relative re-rating, that this company has 10p, this company has 15, so if I buy 10, it'll become 15. That is if it delivers for 10 years, it'll become 15p, but it's not just because in the same sector.
So you're not sharing your sector?
No, I give gyan. I give how to fish. Okay, so in the recent correction is, I think, nearly fully justified. Because of, look at what happened in the last 1 or 2 years. India didn't change so much for these companies to go up, 3-4 times, not last year, but last 2-3 years, from 13 end. But we all benefited directly, indirectly. I don't think that correction is over yet.
Okay. Thanks for that, Samir. Lots more questions coming your way. For now, let's take a quick break. Come right back. We're at the campus of SP Jain Global Singapore. This is BNSN on campus. Welcome back. Thanks for staying on with us. We're at SP Jain Global Singapore. We're with the global MBA students quizzing Samir Arora of Helios Capital on his outlook for the markets as well as his journey and money management. So let's get in more questions from the bright young minds here in the classroom. Who has the next question? Okay, go ahead.
Good afternoon, Samir. My name is Saurabh. My question is, what are your views on India's growth in the long run when it's compared to other emerging markets such as Brazil?
Brazil, okay, I know, but big picture, let me answer. So my theory is that the growth itself is not an issue, because if you see last 25 years, India's growth has been around 7%, independent of which government was in and which government was out. It was a catch-up trade that is happening in India. The question is that growth changing somebody's life? I don't think it is changing anybody's life yet. So we are not growing well. But I don't think that suddenly we will improve this, because as we say, we don't bet on mega changes. But it is obviously going to be a long-term growth story, because we are starting from a pathetically low base. And that is our own system's fault. And they are not overly in a position or willing to change it so much. So this 7 may become 8. I don't think it's becoming 9 or 10 with whatever policies we are following. But it will continue, plus you can add 1%, because sometimes the global environment will be better, or some sector will be doing well, or oil prices will fall.
But among the other EMs,
it's a good rate for investors relative to other choices. Now Brazil and all is too much commodity driven and too much distant from me to worry every minute about it. And they've also not done a good job of their own growth. So maybe we'll do better than them, but I don't have much of a view or I care about Brazil per se.
No, Samir, if we're talking about the other emerging markets, how is India stacking up?
India is okay.
Not great.
No, because the thing is, India is good at a company level. At our growth rate, our growth rate is good because we start from a very low base. And so, if some small country is doing well, okay, doesn't matter. But if you see we should see what we could have done. We have done nowhere near what we could have done. And I don't see that that's changing tomorrow. So that is not the story that India is better than this. And factually, when I get angry, which is half the time, I say that India will be the biggest emerging market one day. Because all other markets would have become developed by then. That is only when I get upset. So in general, I am not going to tell you that it is the hottest thing since sliced bread or something. It's a good story because there's a catch-up trade going on. There are some things that we have improved over the last 25 years in terms of, so we have not done big headline reforms, but if you do an accumulation of all the reforms, we have done quite a bit. So for example, my biggest theory is that even though we have not privatized any real company, but we have done a great job of privatization by privatizing the sector, which means we did not change the government company, but we allowed private sector to come in. So therefore, we have not sold Indian Airlines or Air India, but 90% or whatever, 85% is private airlines. Similarly, we didn't sell Doordarshan, but nearly 95% is private media. So same thing in banks, not to the full extent, maybe 30%. So the point is, ultimately you wanted private sector companies and you got them. So we privatized the sector. We didn't privatize the company. If you had privatized the company, the government would have got some more money, but then the monopoly of that company would have increased. And so maybe it would not have been a better situation. So like that we have done oil, now we have done GST, but we can easily make a list of 30, 40 more things which could have been done in 1 minute if somebody just wanted to do them or had the initiative. So it's okay. That's the answer for big picture.
Go ahead, you had a question?
Hi, my name is Imran Khan, and my question
Congratulations.
My question is, how are you viewing the outlook for the infrastructure and real estate space? Do you think government reforms like RERA have been a game changer?
So first of all, big picture infrastructure, if we say, there are two groups. One is the asset owner. That means somebody owns the airport or the road or power. That are very bad. Views very bad because they rely on government contracts or some 20-year contracts and none of them have been smoothly handled. The other is the guy who's just building that road for the government or somebody. That kind of infrastructure we don't mind. You pay him the money, he'll build it. But if you say, now you take a 20-year view on this road and you collect the toll, we would not buy that company because we don't believe that for 20 years that toll road will be allowed to be kept with him the way, or the same with power or anything else. For example, if you are in alternative energy and you bid 5 years ago for some solar contract, and that time the price was, say, whatever, 8 rupees, and now it's 3. It's a government contract. It is guaranteed by the government. Would you bet on that? We say, no, no, no. Because we think they will run away after some time on some excuse. So that sanctity has not been maintained and communicated to investors ki don't worry. Doesn't matter that today the price is 3 for solar. That time it was 8. The contract was done at 8. There was a guarantee at 8. We shall not come in. The other one was RERA. RERA, I think, is a big good deal, but it's just happening now only. So it will shrink the number of developers. And therefore, in theory, it will be a good thing. But I don't think we have fully seen the outcome of that. Yeah. But if you look at it philosophically, it's right. Because you are organizing the buyer in a sort of a contractual sense. Okay, at least he has a standard contract and a standard this thing.
But it's actual implementation so far, or you think it takes time?
But it's only 3, 4, 6 months or whatever.
So you think it takes time?
I assume because everything takes time in these kind of things. Because old buildings are there, old developers are there. So, but that is like GST. That there may be initially an implementation issue, but you can't criticize the idea. There are some things you can criticize that is wrong. These you can only say, okay, with learning and fine-tuning, GST and RERA should be okay.
Okay. We have a question from the front row. What about you, Samir? When it was in class, were you in the front row or back bench?
Back.
You're very confident, at least. Go ahead.
So, sir, meanwhile, we were talking about sectors. So, what's your take on consumption sectors? Many market researchers and experts are pretty bullish about that sector. So, what's your take on that?
Same here. So, we are bullish basically on two sectors, financials and consumer, because both are under-penetrated. And both, you can imagine that in consumer, that, first, if we like the consumption targeted 300 million people, because one thing we say is we don't believe in billion consumer stories. So for example, I think Walmart will lose all its money in Flipkart because they believe that we have 1.3 billion people, which we don't have from their point of view. Because there's such a big difference and disparity and such aggressive cost consciousness. This is not for everybody. So we say we like under-penetrated consumer sectors, which means targeting urban or 300 million or rich, whatever you want to call it, like AC, like things which are for rich, chocolate rather than soap, let's say in theory. So that can go on forever because first even in this group it's under-penetrated, then this group will increase, then general there'll be some growth in income, blah blah blah. So we like urban consumer or what a middle class consumer, whatever you want to call that group of 300-400 million people. We don't want when you say that the consumer, for example, I became negative on telecom when they started saying that, I was the number one from a mutual fund side, we were the biggest investors in Bharti in 2002. And that was also one of our success stories. But once they started saying that we have 1.3 billion people, I knew that the story is over. That's why you are talking about 1.3 billion people. 1.3 billion people don't exist from a market sense, unfortunately.
Go ahead, you have a question?
Hi Samir, Yogesh here. So elections are happening next year in 2019. So what are your top recommendations in the backdrop of these upcoming elections?
So that we will know in April.
April.
Because till April we won't bet differently. Because right now the assumption is plus minus a few seats, the BJP will win. And if they are not winning at that time, there will be whether I agree or not agree or whatever, from purely market it will react. But it may discount before, and that also nobody will be sure. So right now people will not overly react, but it'll be that time will be a scary thing, but whatever be the outcome. Because every time in the last three times, the market has either gone up or down 10, 20, 30%. But today I don't think anybody can think differently.
But from a stock market perspective, how much importance are you attaching to the elections?
To the event at that time will be very important, but not today and not maybe 1 month later. But in that month it will be very important. But since we are a long short fund, maybe that time we'll reduce our net or buy puts or something we'll do that time, depends on how it goes from here to there. But that will be a scary month.
A scary month.
Yeah, because it'll be so volatile. It could be up also. So suppose I've shorted a lot and it goes up. Who knows? It'll be a volatile month, as they say. But volatile I don't use because that if I'm sleeping and you say, give a comment, it's very volatile. So it has no meaning.
Okay, let's get in our last few questions. Go ahead.
Hi Samir, my name is Vinayak. You have always advocated that there is nothing better than empowering yourself with reading and knowledge. So just want to, can you please elaborate, like, do you have any investor or guru that you look up to?
Yeah, who is?
Yeah, I read everything.
No, but who would you say are in your top 3 that you look up to or you've learnt a lot from, investors?
Or criticize a lot.
Sorry?
Or criticize a lot also. So for example, if you can go on, on YouTube and see, I gave a 1-hour talk against Warren Buffett's views. Although I just went for his this thing also, and I own shares in Berkshire personally. But the point is, I am an open-minded guy, but I read, so I'm not asking you to follow me on Twitter because I have more than 400,000 already, but you can see my book records there, and they'll be on all kinds. And the point is, for different things, there are different things. So Warren Buffett got us started into the whole concept of long-term and all, but if you overanalyze it, he doesn't do what he says. That is my talk, which I gave at one of these investor forums. So generally there are many, but we will learn from anybody. But more than that, when I'm reading, many people say, what is the connection? The connection will be known later. But I can tell you, if somebody really forced me and sat down with me, I'll be able to connect it that this came from this book or that book, although not literally, but because I'm not reading general books, I'm reading financial or biographies or corporate stuff. I'm not talking about reading biology books to find connections. But there are enough of those and they're so fascinating.
No, but who do you look up to? Anyone, or would like to emulate style of investing, something like that? Or whose books do you enjoy?
Exactly. No, that actually you'll enjoy Warren Buffett the most because his one-liners will be very good.
Yeah, his quotes.
His humor will be very good. But for example, suppose I say, which is true, that George Soros is the best performance and what anybody would dream of. But the point is, his universe is different. So I don't relate that, oh, I should have done that because I was never in that in that space. Secondly, his books are too dense. So that's what I mean. Sometimes you say, wow, great, but you don't know what to do with it in terms of learning also. That's what I'm saying. There's nothing like that. Because the guys who are good, sometimes you don't read much about them. I mean, in terms of detail, other than reading that he's good. So problem is, or good thing is, you get tens of books on Buffett. And others you'll get one book. So you can read those also and hope that it all works out. But the point is that some of them have had absolutely super performance. But more than that, the process or whatever they followed was known before. So it's not random. That is pretty impressive. So Warren Buffett, the impressive thing is, I have read his papers from 1965 and all. He used to say the same thing. That way he's not changed. But the only thing is now I think he says the same thing, but now he does what he likes. That is my talk.
Okay, Samir, so before we let you go, it's a rapid fire. So I just ask a question, not too much time. So long term, are you a bull, are you a bear?
No, I'm bull.
Okay. Singapore or India?
For living Singapore, for making money India.
The next trigger for the markets, is it going to be domestic? Is it going to be global? Or a combination?
Next real trigger will be election.
Okay. What about you? Is it iPads or books? Or Kindle or books?
No, actual books.
Actual reading of books, okay. Next big disruption, is it going to be like electric vehicles, AI? What's going to be the next big thing?
First electric vehicle.
Electric vehicles, okay.
You should read this book, Physics for the Future. Super book.
Okay.
Very nice.
Noted.
And it's not about physics, so don't worry.
Tough one, private banks or consumption? Where are you more
No,
upbeat?
private banks. Because they also fund consumption also.
Okay. So are you the kind of guy who goes to the gym or do you go for a run outdoors? Or neither?
I go for a walk.
Okay. Cricket or football?
Cricket.
Cricket for sure. Okay. Finally, Twitter or Facebook?
I'm not on Facebook, although I own shares.
You're not on Facebook at all?
Twitter, although I don't own shares.
Okay, with that, it's a wrap. Thank you so much, Samir, for taking our time and empowering the young minds of SPGen Global with your market knowledge. With that, it's a wrap on the show. Thanks for watching.